afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the Chicago Board of Trade. Today is Tuesday, March 7th, and this is your market recap. And if you're bullish grains and believe in that old saying, oats no, then you're probably feeling pretty darn giddy after the price action we saw in oats today. The May contract made new lows earlier in the morning and then rallied as much as 24 cents off those lows to finish 16 and a quarter cents higher. If oats do in fact know, corn doesn't yet know that oats know. May corn finished the day down 2 3/4 cents, settling at 634.5. And this is the chart that we've been looking at for the last week. We had that big breakdown point there at the end of February and really have not been able to rally back to retest that breakdown point, which we're thinking that we may be able to do ahead of this WASDE report tomorrow. But the market had other ideas, and that resistance point is also the 50% retracement, or basically the middle of the range from the recent high to low. So that's going to be a big barrier to keep a very close eye on through tomorrow's report, 647 to 652. That's kind of the tug of war area that the bulls want to get out above and the bears would like to defend. Now moving over to the soybean market, May soybeans were under a little bit more pressure today, settling 13 1/4 cents lower at 15.15 and after yesterday's run higher, that sparked some rumors of potential flash sales coming. And I think the market was a little bit disappointed this morning that they didn't get that. Now, heading into tomorrow's WASDE report, the market is in a little bit of no man's land, smack dab in the middle of the year's trading range, and the RSI right at 50, which is about as neutral as it gets. As you can see, the soybean market, unlike corn, was able to rally back, retest that breakdown point, actually get out above there, but right back at that midpoint. Corn, we would like to see do the same, but hasn't really gotten the catalyst to get back up towards that 650 level. So again, corn, I'd like to see a little bit more momentum, but the fact that they haven't been able to retrace that is a little bit of a caution flag. Soybeans have already had that move, smack dab in the middle of the range. See equal upside risk and downside risk going into tomorrow's report. And wrapping things up on the grain side with the wheat market, wheat was the big winner of the big three, something that we haven't really been able to say all that often here this year. We poked our head out above that psychologically significant $7 handle intraday, but weren't quite able to hang on to that. May Chicago wheat settled today's trade down 2 3/4 cents, settling at 698. As you can see, the RSI is below 30, which is the technical line in the sand for being oversold. So yes, we are oversold. No, that does not mean that this has to be a bottom right here, right now. I think if we were to get a close out above $7, that could potentially spark some short covering, and we could retest this breakdown point, which comes in near 725 to 730. That's going to be the barrier, again, that the bulls want to get out above, and the bears would like to defend. Now, moving over to the livestock side of things, it was a little bit of a mixed day throughout live cattle, feeder cattle, and lean hogs. April live cattle finished today's trade 12 cents higher, settling at 165.97, certainly towards the upper end of contract highs. The cash market continues to be pretty darn stable up in the mid-160s. Be interesting to see if that continues to firm up. I think for the futures to get another leg higher, they're going to need the cash market to move north as well. So that's going to be something we're keeping a very close eye on. Feeder cattle have gotten a lot of attention here recently. April feeders were able to squeeze out another positive session, settling 7 cents higher to 198.67. The deferred contracts were able to gain a little bit more ground with that May contract settling 95 cents higher to 204.20. As you can see here, yes, we are overbought. But that doesn't mean we can't go higher, like we can't go lower, right? The market can always exceed fair value, and oftentimes the market does do that in these bigger directional moves. So we wouldn't be surprised to see the market go higher, but I think eventually once you invite this volatility to the upside, we get another day or two like we saw here on Friday and Monday to start the week. You're going to get sharp pullbacks in there as well. So I expect the volatility to remain relatively high in the feeder complex here for the foreseeable future. Wrapping things up with the lean hog market, if I can get there. April lean hogs under pressure early on, but we're able to mark a good day for once. The April contract settled $1.32 higher to 84.80. Still have some work to do if you're bullish this market. You really want to see a big close out above 86 to potentially spark another run towards that 90 handle, which has been a big barrier and a roadblock here recently, as recent as the end of February. It was big support back here in December. So again, if we get out above 86 with some conviction, the next target for the bulls would probably be that psychologically and technically significant $90 handle. So that's what we're looking at. That's what you should be looking at too. It's been Oliver Sloup with Blue Line Futures. Remember, trading futures and options involves substantial risk of loss. It is not suitable for all investors.